opportunities. So we have an idea about this. We also have that idea that we can also look at the market measured move against a trade idea. Take a look in the background. So if you saw a candle that looks like this from the cash open, you would already have an idea about this and saying, well, if that was the cash open in terms of the market move from the start, do you know what price you could pay for a buy limit order? Sure. Because if I saw that this then developed into a market-making process, which it absolutely did, would this be a buy limit order you could pay for a position right there at the 50? Yes, it is. Was that the price I paid for a position at the 550 break here? Absolutely. That's my position right there. That's the trade I wanted with a buy limit order, a passive trade entry for a commercial entry. And did we have evidence that the market was market making in 2 time framing on the way from this very toxic drop here? Is there any evidence that that's 2 time framing? Massive amounts of evidence. You just have to look at it, and it's clear, crystal clear, that the market's 2 time framing from the open here. And on that basis, I know exactly what price to pay. I'm going to pay 534s on a limit, 534 quarters, 534 halves on a limit. And then I'm going to pay 535 quarters or 535 halves on a buy stop order. Very specific, in fact. So the idea that it's not specific is rubbish. Very specific trade entries. And we obviously have the ability to overlay our market delta to see the best way of playing this. If we've got too many buyers in here, then this trade here is going to be the best trade. If we've got too many sellers in here, this will be the best trade. So we also have an ability to weight the quality of the trades. So reminding, if the delta looks like that, this is the best trade to do right here. But if the delta looks like this, then we've got to be careful about buying lower lows. The delta's pushing the price lower. What makes you think this is going to be the end of the move? So wait for the price to break, wait for the hold to take place, and then buy at higher prices. It's the theory of delta. If delta is falling, buy at higher prices, sell at lower prices. If the delta is rising, sell at lower prices and buy at higher prices. That's the theory of delta. Very simple. There's only 4 conditions from 2 delta lines. So that's it. That's the basic idea. And we've got to have a reason to buy with this. We've got to have a storyline to get involved in here. We've got to have a need for the product. We've got to have an idea that there's a developing picture in here that we want to take advantage of. The picture we want to take advantage of is the blue line rising on a red candle, which is what happens here. The blue line's rising on a spinner candle, which is what happens here. The blue line's rising on this drop candle here, which is happening here. These are all opportunities for me to buy into this. All of them. And all of those opportunities, even on wheat, made some seriously nice money. We've got the reason why. We've figured out the reason how to trade them using delta, price action. We've been able to read the market properly by recognizing 1 time framing and 2 time framing. We've figured out some reasons why. We've talked about credit spreads. We've talked about gamma. We've talked about risk premiums. We've talked about the rotation in terms of the beta markets. We've covered so many things in this one little classroom that you're probably going to have to kind of go over it several times before it really starts to sink in. And this is only the beginning. It's not the end, it's the beginning of a journey where these elements evolve into things that you really have trust and faith in. You're not going to get any trust and faith until you see it happening for yourself. We've looked at the macro picture where we've looked at the big arrival of volume in the puts and the calls. We've been able to establish on the macro picture that these associated with a change in the pricing of the gamma are incredibly powerful. We've recognized this idea of the fast and the slow, the idea that even when we recognize fast and slow, we can now project roughly where the market maker auction is going to take place and where the auction is going to finish, more importantly, giving us an estimate about where we could maybe buy into some of this as a product. We've also established many other things. We've established that if the VWAP is sell side and it's trading at 2 sigma, the price, if it ever trades back to -1 or +1 sigma, will always have some price action. But if it does trade back to +1 sigma from a sell or -1 sigma for a buy, then there's a very good chance that the VWAP may come back and hold. And if it does, we will almost definitely start trading to the 2 sigma on the other side. Further reference to the VWAP class would probably do you some good at this stage, but obviously if you come back next week, we will probably be looking at this in more detail anyway. I hope there was something of value in it. I hope you recognize that perhaps for a change, you're getting stuff that seems to make sense. It's not about overbought and oversold stochastics that lag behind the market. Everything we've showed you as an indicator has a lead attached to it. Everything we've shown you as an indicator tells you what the market is doing right now on the right-hand side of the charts. It doesn't have some voodoo logic attached to it about how many rabbits can you count and how many rabbits therefore equals the extension of a market. That's bollocks. It's about the market makers and the floor traders, about simple arithmetic, simple tools that makes them money, that's always made them money. So when you look at it, you're going to be more informed. You're going to be part of that informed trader group. Turning that into money is still a challenge. Sometimes takes some people minutes to accomplish. And for some people, it takes months and potentially years to still accomplish. Nobody ever achieves that perfection at any stage at the same rate as anybody else. For some, it's still going to be a hard journey. Accepting the obvious, accepting what we're trying to show you can be challenging at times. But for others, it just sinks in and you're off and running instantly. You're reading it. You know what the value is. You're taking advantage of overweights and underweight betas. You're taking advantage of VWAP. You're buying above VWAP in direction of the markets, or you're selling below VWAP, or you're recognizing commercial auctions and you're pinpointing the perfect entry into day session lows or highs. Whatever floats your boat. Personally, I would recommend you try and get buys above VWAP and sells below VWAP. Personally, I think that's the better way for retail traders to try and get money quickly, is to trade in line with the market flow, especially when you're running between 1 and 2 standard deviations from VWAP. It's a very powerful area to stay with it. So keep trying to stay with it. Keep trying to sell into buyers below VWAP and keep trying to buy from sellers above VWAP. But make sure before you do any of that, there's a reason for the trade. If there's no reason, don't do it. You now have reasons to be buyers above VWAP. You've got reasons that you have informed trading opportunities above VWAP. Don't pass up on those reasons. Take advantage of them and you will start to find the trade opportunities showing up. And then don't do the cardinal sin that retail traders always do. Cut off your trades early. Panic into a break-even stop at +1 or -1. You know where your target price is. It's session highs for a buy or session lows for a sell, or previous day highs or previous day lows. You know where your target price is. You double check your values and your values are still good. You double check your price action and you're still one time framing. Why do you want to come off that trade? You don't. Let it ride. Let it ride. The longer you let your price ride, the more chance you have of ending up with that 1 or 2 trades. And there are only sometimes 1 or 2 trades that rip every day. All the rest is a bit noisy, a little bit 5s here and 10s there and 2s there and scratches there and 2s there and 5s there and scratches there, or -2s or -5s and scratches there. And then boom, 100, boom, 50, boom, 1,000, whatever. Let it ride when you've got the opportunity. You see that from Reeves' screenshots at times. Johnny sent some screenshots in. When that opportunity rides, Theo's trades, Melvin's trades, when that's riding, you ride it. And you ride it hard. You let it go to where it's going to go to. You don't cut it off early. You make the monies. Try it. You'll be pleasantly surprised, because if you don't make those big swings, you're going to get paper cuts to death by taking small scratches here and commissions building up. And that's going to happen at times. Sometimes you're going to be in a crap phase of a market that doesn't break. And not every bottom edge is going to be that bottom edge. You might have to take 2, 3, 4 attempts at a bottom edge for +1s, +5s, -2s, and then boom, +100. Don't be put off. Read the value and stay with the game. That's what professionals have done for centuries. That's what you must do from now on, guys. Have a good one. I'm out of here. Have a great weekend. I will say one last time. Adios amigos, arrivederci. Auf Wiedersehen, sayonara, tot scenes. Tak do svidania. And spasibo. Skål!